Hi, I'm Grant Stephen.
And I'm Kris Bernier.
And we're the Two Investment Guys. This week, Kris and I want to turn to the markets again and talk about some of the issues going on at the moment. Firstly, if we look at capital market indice returns so far this year in 2012, the average major market is up somewhere between 5 and 7%. Germany's actually up about 14%. And we've got Hong Kong up 12% as well. Kris, it's interesting to note the NASDAQ in particular, which has got a lot of technology companies in it, is up about 11%. It's also at an 11-year high. So that's a pretty remarkable milestone. And we wanted to talk a little bit about, well, what's changed? Why has the market been so strong so far in 2012? And it really amounts to the market is more focused now with more emphasis on the positive macro data points that Kris and I have been talking about. And we wanted to touch a little bit on that. So why don't we start with China?
Sure. Well, if we look at the Chinese Purchasing Managers Index, it suggests now that we're continuing in expansion mode now. There's a lot of concern about China's growth slowing from above 12%, now sitting above 8%. But still, it's very solid growth, and the positive manufacturing data reinforces that fact. If we look at the U.S., the Institute for Supply Management, both manufacturing and non-manufacturing, has beaten expectations and is another positive factor for the continuing data, positive data that we've seen out of the U.S. And last week it was a jobs number.
Sure. The jobs number came in at 235,000 new jobs in the month of January. The expectations were for 135,000. Equally important was that the prior 2-month numbers were revised higher, and the actual unemployment rate in the States has now dropped to 8.3%. Still high historically, however, remarkably better than what a lot of the analysts said. And that's the point here, is why did the mood change in the market so much? Because these types of data points are now beating all the analyst expectations. So maybe we're not standing on the edge of the abyss.
That's right. The focus up till now has been on the headline news. Correlations of assets had increased, and we've seen a bit of a divergence from that pattern lately, and it's more focused on fundamentals and not so much on Greece and Portugal and the rest of the over-indebted nations in Europe.
Right. We do have to talk about Greece, though, Kris. It looks like we're getting down to the wire on what an outcome is going to be. Is it an orderly default? Is it disorderly? There's a lot of negotiating going on behind the scenes with the austerity measures, which a lot of the politicians are now pushing back on. We are literally weeks away from having some clarity around what the outcome of that is. The other thing, Kris, is the S&P earnings.
That's right. If we look at earnings in the S&P 500, we're about 3/4 of the way through now for the fourth quarter of 2011. A little more than 60% of companies have beat analyst expectations. The previous quarter, it was about 69% beat analyst expectations. And while growth has slowed a little, companies are still growing. We're seeing increases in dividends and share buybacks, and all of that is positive from the corporate front, which is what we need to focus on when we're looking at investment in equities.
Sure. So what should somebody be doing here? Well, Kris, you and I talk all the time about focusing on sort of a tactical asset allocation, make sure you've got proper allocation to bonds and equities. Yield is really important, making sure those positions are paying you every month as an investor. And as well, we were right a couple months ago, Kris, when we said to investors, pay a lot less attention to all that headline sentiment that goes on, and make sure that you've got something that's built properly for you.
That's right. If you'd like to know a little bit more about some of the tactical asset allocation models and some of the tactical strategies that we employ, give us a call. You can reach us at TwoInvestmentGuys.com.
Join us next time. Kris and I are going to continue our discussion around capital markets. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.